Hello and welcome to the Stock Planner channel. Emerging markets like India, China, Philippines, Vietnam should do very well in the next decade. Today I'd like to speak about one of those emerging economies, India. It is the sixth largest economy in the world and is about to overtake Great Britain, the original colonizer of India. I'm going to cover a little bit of background on India, why India will become an economy of the future, based on the labor force and other factors. We'll talk a little bit about the changing order of economies over the next 20 years, and we'll talk about ways to get into the India market and take advantage of its growing economy. So let's just jump right in and get started.
The Stock Planner channel is an education channel, sharing our swing trading ideas, learning from each other and winning. Watching and engaging with this channel will help you develop your own trading strategies and risk management plans. Let's take the journey together on becoming a more consistent and profitable swing trader.
India is a small country with a lot of people, but like I said, this economy is going to be growing, and as an investor, you may want to take advantage of this growth, because I think the United States growth, especially this GDP, it's sort of slowed down. It's going to still be strong. It'll be number one or number two over the next 10 years, but it's not going to grow as fast as some of these emerging economies like India, Indonesia, Vietnam. Their economies are going to grow a lot faster. So, as I said, India's economy is one of the fastest growing economies in the world. It's a very big country with a large population and will eventually surpass China. India's economy has been growing ever since its independence from England. That occurred in 1947-48, but really took off in 1991 when they instituted some economic reforms based on the fact that one of their close allies, Russia, collapsed. They were forced to open and become more competitive with the world, and it resulted in some phenomenal growth. The outlook looks very bright for now. The IT sector is their major reason for this growing economy, and their technical training is excellent. I'm sure we all had some help calls or service calls where we received service from an operator in India. Some English was good, some English was bad, but we all got used to it. Their labor force is very cheap. So customer service for a lot of IT companies moved over to India. India is the sixth largest economy, growing very fast, and will soon overtake Great Britain. Is Modi good for India? He's the prime minister. He's the 14th since their independence. He promised a lot of jobs, but they haven't appeared yet. Unemployment is still very high, and the high-paying jobs are hard to find. 80% of all the jobs in India are still unskilled, or service type, or street vendor, or small street side businesses. The good jobs haven't materialized yet for 1.5 billion people. So why is India growing so fast? One of the reasons they're growing fast is they have a young population and people that can work. India has grown in an environment that has become more competitive, global, and of course turbulent. You only have to look to Ukraine to see the turbulence and how that affected our economy. The fact is, the balance of the world economy is shifting. The USA, France, Great Britain are very mature economies, but their growth is starting to slow and being overtaken by some of these emerging countries, especially Asia and China. And China is going to have a great influence on that area of Asia, where, especially Southeast Asia, where you have Vietnam, Thailand, Indonesia, Philippines. The growth is going to be much bigger. So, not being an expert at this, I went out and Googled countries by GDP rank and got this list. And it lists the data from 2019 to 2026. And I took the data from 2021 to 2026. Essentially, 5 years. And I copied that data into a spreadsheet, a Google Sheets, separated the data, and calculated the difference. I was experimenting here with the arrows for my map. Google is somewhat limited. Google Sheets is somewhat limited. You can't do a lot of overlays like you can with Excel. But this does serve, and basically I plotted the differences between last year and the current year and come up with the difference and took the highest ones, the highest growth in GDP, and plotted them green. The next highest growth is lime green and then tan. You can see that Nigeria had a 65% growth over those 5 years. Turkey, it's at Vietnam, 50%. What did the United States have? 17. Russia, 14. Great Britain, 20. 29 for Ireland. I have to look at that, Ireland. Malaysia, Philippines, 34. And you can see Brazil. You can see which economies are jumping and growing the fastest. So then I was interested in India, Indonesia, Australia, the Asian, basically. And then I tried to find the ETFs that basically applied to those countries. And then I took the price of this ETF 1 year ago using the Google Finance function and the current one, and found out what the 1 year growth was. And then I've calculated the 1 year growth of the GDP. You see if percentages were similar, and this exceeded the growth. The 1 year growth for Brazil exceeded the 1 year growth of the GDP by 10%. And you can see the positive numbers here and the negative numbers. In the ETF that I usually play, well, I play 3 at the moment. This is why I'm doing this exercise. I play EEM at a negative 19% return. Brazil, EWZ, which I've traded for many years, 10%, which I didn't know that, but and Japan, which had a 1%. That's not bad. And so I then took these ETFs that had a positive number here. I didn't care what the number really is, basically. I don't know if this is actually done right. And took these 7 or 8 or 9 ETFs and added them to my watch list. These ETFs are growing. These aren't, although it's been a tough year. And here's what we're talking about now. India. There's 2 of them here. EPI, which I've chose not to do, and INDA. By the way, I got that list of ETFs off the internet as well, and just copied that. Then did some calculations to see which ones did the best this last year using Google Finance. So then I looked at the Ishares India product sheet and got this off of that. I used it in my briefing here in just a minute. I looked at the performance. So my spreadsheet has shown that there is a shift in GDP growth rates. And that shift is going to be led by China, the US, India, and Japan. We won't be left behind. My wife is a Chinese eye doctor. We have an apartment. We actually have 2 apartments in China. And so I understand that China wants to do business. They want to do business with the world. They're not going to rock the boat that much. Okay, since 1991, India's growth has been very, very rapid. And it's expected to be a little slower this year because India is facing just what a lot of countries, including ourselves, transportation issues, the war in Ukraine, oil, COVID. But their GDP should grow to about 6.5 per year. I believe that beats us. Yeah, they must manage their inflation, their food costs, just like we are. I'm sure they're having some supply issues, but they're about to take a leadership role in the economy, the world economy, very soon. There's many opportunities for industry and services, communications, especially communications in India. And I'm sure their exports will increase. As I said, they have a large, young workforce, even younger than China, which is about to age very soon. India must make and create some new trade agreements with the world, including Russia. I'm sure they're going to open some new contracts with Russia and buy their oil based on their friendliness that they exerted over the Ukrainian war. I'm sure that their exports will increase. I'm sure there are going to be some more opportunities for their young people, especially in telecom. So the Ishares India ETF, which is INDA, is used to track the major industries of only one country, India. It's a very popular ETF. This ETF offers exposure to large and mid-cap type companies in China and India. I'm going to do China next. I got mixed up there a minute. As an American citizen, I can't trade the Indian stock market. And this ETF allows me to access this economy. And some of the other ETFs, EEM, FXI, they're multi-country. This ETF is only focusing on one country, and that is India. So what companies are included? Energy companies, information companies, financial companies. And financials, by the way, that's an area where India really needs to focus in order to grow their economy. They need to get their finances where they can loan money to the various different industries and build up their base. Communications and information technology is where I'm focusing on. I think that's one area where they can really grow. And then Unilever here. That's just some of the companies. I think there's over 500. Let's take a look at what it looks like on TradingView. Now, I'm a swing trader, and I try to go ahead and pick the tops and bottoms and then capture the trend in between these tops and bottoms. And this is a zigzag indicator. It's a perfect indicator. It looks to the future in order to paint these lines perfectly. We don't have that ability. Right now, Mr. Zigzag doesn't know what it's doing, so it can't paint. This could go up this way, and then this bar would go continue on. It waits to paint till it knows for sure based on some future data. But back here, we can go ahead and look at these tops and bottoms and then see if we have an indicator that maybe predict that. We have a crossover here with the MACD. It's below the zero line. That's when I start looking for a long. A stochastic RSI, come back around here, and the RSI crossed over all at the same time. And when that happens, I look to take a long. Let's see if this worked out for the short. MACD crossover, but it's above the zero line this time. And that's the time we take a look for short. Here's the stochastic. Here's the RSI. Hey, that did it pretty well too. This is the 3-bar strategy, and I have some signals out on my Discord chat. Also, I have the settings for these in the description below. TradingView is free, and the settings are free. Discord, many aspects of the Discord are free, including some of the signals here. Let's take a look here. We got below the zero line, but we have a crossover. I like that. I like to see the crossover. And the RSI, stochastic and RSI. And when they all occur within 2 or 3 bars of each other, that's when we like to take a long. That's great. Short here, short, and it occurred here. That's about 3 or 4 bars, and that's a down. There was some pain here, and you still have a losing trade. I don't know what it's doing here now. 3 good ones and maybe 1 bad one. Anyway, I think it does trade okay with a 3 indicator strategy. And so I just need to wait to when the RSI comes back around for down, or comes back around the 30. This is 70 and 30. Settings are in the description below. And just wait. And I can set an alert in TradingView to wait for that. And so I have another spreadsheet that I look for various different areas that I'm interested in. This is 5G stocks. These are financial stocks. And the stocks I need to look for that sectors. Anyway, emerging markets is a short for India. And I guess that's based on here, and above the zero line. And usually these signals last 2 or 3 days. Yeah, that's a short. But we look like we had a green bar that Friday. I'm doing this on Saturday. That green bar caused some confusion. But my strategy says it's going down. Zigzag says he doesn't know what it's doing. It did know what it was doing by going up. Like I said, we got a short here. Short. Oh, it's an early short. I don't know. But I do know that I did take this trade on Friday because I wanted to get into emerging markets in India, which I've never played this before. And so I took a option spread and tried it. I pulled the lever for about $200. So what do you think? Is it going up or down? Are you interested in emerging market? Are you interested in India? Do you think investing in India, Vietnam, Philippines, China? Now, China is very risky. I'm going to cover this because a lot of people are scared to invest in China, delisting, and lots of little other problems. Or do you want to stay in the U.S. market, which is generally I do. Let you know in the comments below. And don't forget to like and subscribe. And we'll catch you on the flip. Thanks for watching.
Engaging other traders with peer review, comments, constructive criticism, your own trade ideas and watch lists, is the first step toward becoming a profitable trader. Take that first engagement step now by hitting the like and subscribe button and maybe even a notification bell. That way you won't miss any new swing trading ideas. And don't forget to join our free Discord, to follow along my progress of becoming a more consistent trader.